Good evening. Ira Epstein, and here we are with your Spider ETF stock market wrap-up, and this is for the evening, and we're now on August 8th, 2024. I'm hoping to get your weekend updates out on time on Friday night, and the reason is I'll be gone Saturday from Chicago and part of Sunday. I don't know what time I'll be returning Sunday. I have a friend, his son's going for the land speed record in a Lamborghini. From a standing stop for a half-mile straight course, got to get over 259 miles an hour. And it is a Lamborghini engine and that. He's already done 259, so this would be a record. It's going to be exciting. It's not your normal engine. It's 3,000 horsepower, believe it or not. So I've been invited to be in the paddock with him, so this is going to be exciting. One of my friend's sons, they all know I'm a car freak, so I go to a lot of things. All right. So, hold on. Tomorrow's Friday. Write me tonight. Tell me what you want me to cover. If I choose what you want, you get a free subscription to one of my services, all right? I'd like to give it to you. So why don't you write me and let me know a market you want, and if I choose that market, away we go. I'm going to remove Amazon, but I've been right on Amazon. It's been down pretty good. It did recover today, up $3. In fact, the whole market recovered. What the heck happened? You know, we had that huge break on Monday. What was a bounce yesterday, and the question was it a dead cat bounce on Tuesday, that is. Wednesday, we dropped down again, and the question is, was it going to go through the current lows or hold them? It did not. Why not? Because initial jobless claims came in and went down. And when you dig into them, you see that people from Texas, Michigan, Missouri, went back to work. Now, let me think about Hurricane Beryl. Let me think about hurricanes, tornadoes, all those terrible storms we saw a week and a half ago. Let me think about when I said they're going to retool in Detroit, and they've shut down some of the lines, as you've seen, and that people are going back to work. I didn't say that it's resolved, but the market jumped on that. It was all over the news wires, and that's what they're looking at. So the idea for the time being that we need an emergency rate cut of 75 basis points, forget it. You don't need it. However, none of that changes. So Jeremy Siegel, please listen and don't criticize this. I agree with you. The Fed is behind the 8 ball, but I think what they do has to be done in a way to not panic markets. And I think that the big question from the point of view is, will they have the guts in September to go 50 basis points instead of 25? I think no cut is off the table. You'd have to have something happen in the world. It could be a war in the Mideast that the U.S. gets involved in. It could be other things. But barring just normal financial issues, don't know. Speaking of that, I did mention yesterday that Egypt had received a message from the government in Tehran to not allow civilian planes in Tehran airspace for 3 hours. My question was, were they setting up for a war? But if they were, 3 hours, how do you start and stop a war? Or even an aggressive move, like they did last time, in but 3 hours. But it could happen. So what it now turns out to be, and what the analysts think it was, is defensive measures, testing because the retaliation's coming, and all the Western countries are saying to Iran that they can, including the U.S. directly. We know you're going to hit them. Don't hit civilian people, and make it moderation. Will they? Who the heck knows? But that's it. And we don't know how Iran will go about it. It could be them. It could be surrogates. Who the heck knows what they're going to do? All right. Let's go to phase 2 of all this, because I think it's important. Let's go to the charts. Amazon. I don't call that much of a, if you will, bounce yet. There's a big gap here. Gaps like to get filled. They don't like to get left like that. So I can see that that gets filled. You have a pattern of lower highs, lower lows on the charts. A sign that the market wants to go back up would just be taking out now 167.58. It would suddenly give you higher lows and a higher high and break this vertical break pattern. Now, Could it get enough power out of that to fill the gap? Well, the first stopping zone would be the 18-day average. That number is going to drop tomorrow. If you just go back a day from 178.63, the day before was 180.13. 178.63, $1.15 roughly, right? So we come back, and the day before was a 189. So let's use $1.20 or so. So that number tomorrow when we open is going to be closer to 177.40. Just a guess as to where it will be. It's not a perfect world. And as you get in there, that starts filling the gap, but not there, if it does that. That's a big if, but that's if it does it. Another resistance point you can see is right here. The 200-day average at 169.23. We've spent a reasonable amount of time, a week under that number, so it might offer some resistance as well. And momentum never did embed, it just oversold. So the arguments are there to fill it. Will it happen? I don't know. I know as much as you do about that. In CrowdStrike, I got the pattern that I wanted when the market came up and took out that high right there, and you lost the bearish embedded reading now. Let's go back. This is a bearish embedded reading that's on the verge of being lost. This was Wednesday. Today you've lost it. My work says that before this low is taken out, there's a super high probability price and the 18-day average are going to come together. And from there, the game starts afresh. We'll see what happens. In URA, again, you lost the bearish embedded pattern. So I think that once the market tries to clear this area before it gets back under here, price and the 18-day average can meet each other. Doesn't have to happen in one day, and most likely it won't. But it's what they're supposed to do. In Rivian, you held very nicely the 200-day average and the Bollinger Band. You had one spike day where you came right back into the 200-day average. You've been holding it, and now you're void of this break. So this leg of the break is over in terms of swing line. You now have a higher high and a lower low. Prior to this, you had lower highs, lower lows as the main force at work. Dell is still bearish, hasn't come out of this, still has the bearish embedded reading, still doing terrible. It certainly is not performing with the market as a whole. Linn didn't do very well either. It couldn't even get over the 18-day average of closes. The trend is still down. The battleground is between 172.43 and this high of 175.80s. Take that out and you probably go to the upper Bollinger Band. Don't take it out and see the market as a whole slip back a little bit. You might be going back to wherever that Bollinger Band is, but that's going to be a higher number tomorrow. That number's moving. It moved $2 today. Just take a look at that. So you're going to move at least that, I'd say, tomorrow. And that means you're going to be in the 166 right near the lows. So interesting time coming in that. Market's getting its footing. And you're trying to get your footing in the home builders at the 100-day average in the Bollinger Band. Very oversold. No, it's not buy signals, but they are signals to cover shorts. So if you were a short seller and you were to call me and we were to talk and discuss a position, I'd be saying, here, this time, you hit the 100-day average, you hit the Bollinger Band, you're not embedded, it's time to come out. Did you give up anything? Not really. In XLF, lower highs, lower lows, and again, a battle for support taking place at the 100-day average in the Bollinger Band. You had one day you settled under it and you came right back to it. So, now the question is if you can take out the high here of Wednesday, this market might be ready for 42.81. In XLI, the industrial sector, completely void of a trend. You just got a higher high, a vertical price break, one day under the Bollinger Band, right back, probably trying for the 18-day average of closes, but I don't see a trend play there. Nor do I on XLE, the energies, lower and low, higher high, coming back up. Okay, I just don't see anything to do. Gold threw out its first buy signal. So I think that gold was a buy today at 223.13 on pullbacks during the day. I was telling customers about that. And You don't want prices to get under here, and you're looking to see if the market can get back up to 228.53. Now, what would give it the surge, if it does go up, I don't know if it will or won't, but I know where I'd be wrong in my analysis. It might be that Iran does something and the market gets spooky over the weekend or Monday, or nothing happens. I don't know. I do think that it's going to run anyways because I think the dollar's under pressure and I think interest rates are going down. In SLV, this is not gold. This is still an industrial metal. And now you've got the combination coming together of massive resistance on ways back up of 26.08 to 26.10. This market's got a problem at those numbers. Could it bounce? It could, but I see nothing to get excited about. Give me a good rally or let the market rally, and I might tell clients to go short that in time. In copper, market's got to do the first leg of getting over the 200-day average. Until it does it, it's just laying here with basically an embedded reading that is oversold, not embedded, and it's just not telling you to do a darn thing with it at this point. In TLT, why is it pulling back? Well, the reason the interest rates went higher, I'm going to repeat, is first, did the market really believe the jobs report as much? Did the market buy into the argument you have to have emergency rate cuts that a number of analysts, that respected ones, were talking about? No, the market thinks that we have an orderly pattern, so it's pulling back, adding some yield back to the market. I look for support at the 18-day average, but keep in the back of your mind, you still have a lower low and a higher high pattern. A lot of noise in the market, got overbought and correcting. Dollar index, I'm looking for the pros to sell into it on the short side at 28.71 to 28.73. There's not enough money to play for because when you do that, you'd be looking at 28.57 as your first cover spot, then potentially 28.44. But the trend is bearish until and unless you get over 24.89. You're in a correction mode in FXE as you're pulling back to the 18-day average. You've got the trend down, the bias up since you're over the 18-week average, and not a lot to do there. You know, what I rip off for you each day are swing lines, moving averages, obviously the slow stochastics, Bollinger Bands, and I don't show window envelopes here. And you might ask why. It's not that I don't love them. I love them. There'd be too many lines on the chart unless you've taken my course. Once you do, the lines don't bother you. There's 5 indicators, and you're looking at the 5 indicators. And they'll look something like that. It's 45 videos in the course. See what I do in a historical chart. You bring up the same chart there. You do the same thing. And then, in order to drill it home, you get access to all the charting software, my market research. You're invited to come in for 30 days free to all my morning videos that are subscriber videos, and I will walk you through what is going on. You'll see. I reinforce continually. By the way, you know who I'm reinforcing for? Me. I want to keep myself on the tried and true pattern, all right? And that's what I'm trying to do. 30-day trial to it, the charting course, full analysis of what's going on. Go to iraepstein.com courses, move your cursor to the top here for courses, give it a click, join. It's the end of the summer, you're before Labor Day. I think you can use your time wisely. You have a good day.